today we are going to value Tesla's FSD and robotaxi business. First, let's take a step back and look at the 8 revenue sources of Tesla. So this is the screenshot of my DCF model of Tesla. And if we zoom in, these are the 8 sources of revenue. The first 3 are directly related to the electric vehicle. And for this business, I already made a video that values Tesla's EV business separately. So if you're interested, you can check it out here. Secondly, the energy generation and supercharging business are also important profit generator for Tesla. So I might have to make a separate video on this later on. But anyways, these 5 sources of revenue already generate stable revenue base for Tesla at the moment. But of course, the market is excited of the future potential, mainly the FSD as well as robotaxi, which we will value today, and the humanoid business. So today we are looking at these 2 revenue sources, and for FSD, we can divide it into 2 sources as well. First is the FSD revenue coming from Tesla cars, and second is other car brands utilizing the FSD technology. This is not happening at the moment right now, but Elon Musk has hinted before that this may happen in the future. And third is, of course, the robotaxi business. So let's start modeling on the first revenue source. We start from the global total car sales number, and for this we can utilize the same numbers that I used in the previous video. So the global auto market will grow very slowly, but within that, the EV penetration will increase very quickly, from current around 16% to maybe 10 to 15 years later, very high number. And within this EV market, Tesla will also have to fight for its market share. If I actually apply these numbers, this is how it looks like. The global auto market growing slowly, but the EV penetration increasing very fast. And within that, Tesla market share can range as high as 30% and as low as 10%. So in the end, Tesla will be selling between 8 to 20 million cars per year, far into the future. And this Tesla's market share can be our first key variable. But within this, we also need to make assumption on how many Tesla users will buy FSD. And we can call this the FSD take rate. And if you look at the historical trend, there was some excitement in the past, but due to some critical accidents and people being disappointed with FSD being not really fully self-driving, it currently sits at about 10%. But going into the future, in the base case, I assume that it can go as high as 54%. In bear case, it will be only a third. But in the bull case, I assume that almost everyone will be using FSD. So this can be our second key variable for the model. So for the FSD on Tesla cars, we start with the number of Teslas that's being sold. And out of that, how many people will take the FSD, and multiply that by the price. And Tesla FSD price fluctuated a lot in the past, between $5,000 up to $15,000. And recently it's been at $8,000. So going forward, I just assume that it will sit at 8,000. But obviously, depending on the timing and competitive dynamic, this can change. But we can adjust this later on if needed. And for now, we just use the first 2 variables as the key variable for the model. And let's move on to the FSD on other brands. And for this, we need to think about the concept that FSD or nothing. Which means some people seem to assume that if Tesla FSD is not ready, no one else can enjoy the autonomous driving. But this is obviously not true because Waymo and Baidu and other companies are already utilizing the autonomous driving technology. Of course, the key difference is that for Tesla, it's doing the current FSD just using the cameras that's already in its cars. However, for other technology companies, they need to have these extra sensors that are quite expensive on top of their current cars. So Tesla, you don't really need additional equipment, and the car prices are about 45 to 50K. But for other technologies, they will need additional sensors, which can cost a lot of money. And we cannot exactly calculate this number at the moment, but for Waymo, it's known to be between $50,000 to $80,000, which is already more expensive than Tesla cars. But for Baidu, for its 6th generation models, some estimate that the cost went down significantly, between $10,000 to $15,000 per the extra sensors that you need for autonomous driving. And this cost has gone down very significantly in the past 2-3 years. And it's understandable because as these companies go into mass production, the cost is going down very quickly. And into the future, if we can assume that other technologies can execute these autonomous driving at lower cost, say between $5,000 to $10,000 extra dollars, they can be competitive to Tesla's FSD. So instead of just relying on this notion that it's either FSD or nothing, we can be more realistic and think that there will be competitors to this Tesla's FSD with their own pros and cons. So for this market, we need to assume how much market share Tesla will enjoy. So based on this, let's move on to the second revenue source. We start with the non-Tesla cars that's sold in the market and Tesla's market share within it. And for the price, we just use the same price. However, in this case, we assume that OEM will also take share of the revenue, so Tesla will only get 50%. And Tesla's market share here will be the third variable. And moving on to the robotaxi revenue, we can utilize top-down and bottom-up, but for the model, because it's at a very initial phase, and for Tesla, it's not even started yet, so I use the top-down as the main model. And here we start with the global taxi service revenue, which is about $230 billion per year, and it's growing at about 2 to 3% per year. And robotaxi penetration is currently very low, but going forward, it can range between 50 to 99%. And because we're going to accept the fact there will be competitors, we need to assume Tesla's market share, which can be between 10 to 33%. And these two will be the key variables going into the DCF model. And if we were to use the bottom-up methodology, we can calculate the driver's hourly wage and how many hours the car can drive per day, as well as the number of drivers that's being replaced by this robot technology. However, again, there's not enough information to start on this yet, so in such cases, we can just start with the top-down and check the numbers again with bottom-up as more data become available. So after these revenues, we need to think about the margins and the capex for each of these sources. So first, for FSD on Tesla cars, I assume 20 to 60% EBIT margin. So 60% will be very good software margin, but 20% case will be due to high competition, Tesla cannot charge high prices for its service. And this will be our sixth key variable. And for FSD on other brand cars, as we saw before, it will be 50-50 split with OEM, so lower margin for Tesla here as well. And for robotaxi, out of the total taxi revenue, about 60% are for the labor cost. So for FSD margin, I also assume the 60%. Regarding the robotaxi, it's also important who is investing in those fleets. Will Tesla own those robotaxi cars and sort of become like a taxi company? But what's even better for investors will be Tesla becoming a capital light, just software provider. So someone else will invest in those car fleets and they will manage those assets and Tesla will just provide the service. And this will be the best scenario for Tesla investors. So for the investment overall, I assume the revenue per invested capital of the range between software and cloud company. So if Tesla becomes purely software company, I mean just for this FSD business, they can enjoy very high revenue to IC ratio. But if they become more like a AI infrastructure company, they will need to invest more capital. So this becomes our seventh variable. And now we can move on to the valuation. So for the 7 variables we saw so far, I set everything to the bullish case, and Tesla's FSD enterprise value comes out to be $379 billion, which is about 50% of current market cap. And if we change all variable to the base case, then we get $244 billion, which is 32% of market cap. And for the bear case, we get $116 billion, which is 15% of the market cap. And in order to make these numbers more relevant to the stock investors, I changed the number to value per share. So the FSD business can range between $36 to $117 per share. And on top of this, we need to think about the timing, and this can be our 8th variable. And this is important because in the base case model, I assume that 2025, so this year will be the last year where they're finalizing the FSD, and starting next year, 2026, FSD take rate will go steadily higher to 54%. However, this process can start several years later. Because even if the FSD technology itself is ready, Tesla needs to go through the regulatory hurdle, not just in the United States, but in other countries as well. So if we assume those, the take rate will start to increase by, say, 2029 or 2030. And this will impact the valuation. Because the number we saw before, like 379 billion, is assuming this take rate that we saw before. But if this timing gets delayed several years, we need to discount the number additional like 4 to 5 years, and they will decrease the enterprise value to $235 billion. And if we calculate this to the per share value, it will go down from $117 to $73 per share. So it will actually be a meaningful decrease in the value per share. And now that we have the FSD valuation, we can do some of the parts valuation. As I mentioned before, in the last video, we calculated the enterprise value of the EV business alone, And today we calculated FSD so we can add on top of it and get that these two businesses' EV per share can range between $60 to $337 per share. But obviously on top of this, Tesla has battery pack business which already generating profit, and also humanoid business which has very high potential going into the future. So my next video will be on this humanoid business. And today we can extract two insights from our analysis. First is that even though the range can be quite large between like $90 to $400, it still can be very useful because just 1 year ago, Tesla's share price was lower than $200. So just looking at these valuation numbers we had, we can make a decision that, when about $170, there's some margin of safety to Tesla position. However, when the stock went up as high as $480, it's already above our most bullish case. So in this case, it's easier to make decision to sell some, if not all, Tesla shares. And our second insight is that the three tasks that we need to do in order to be successful in AI investing all came out useful for Tesla case. Like first, market gave very good opportunity to go into Tesla position. For example, just a few months ago, everyone was super excited about Tesla. Like the FSD was happening and Trump became president, in which Elon is heavily invested in, and everyone was psyched about humanoid. However, in just 3 months, all this took a 180-degree turn. So many people are quite bearish on Musk and Tesla these days. So as we saw in this first point, the market will give good opportunities every now and then, so we just need to be ready. So what we need to do while waiting is that as a consumer, we need to check the company's progress. For example, for FSD, instead of just becoming super excited about the technology becoming reality, we need to think about the timing of those acceptance. Like for example, even if FSD becomes fully available in say like California, it needs to expand globally in order to have this high penetration rate. So we need to check if it's happening this year, next year, or it's being delayed by several years going down the road. And another example of this can be Microsoft and its Copilot. I remember that about 1 or 2 years ago, everyone was talking about Microsoft and OpenAI and how they will dominate the AI space and how Google and Apple are being left out in this AI race. However, if you look at the Microsoft's past 1 year share price, it decreased by about 9%. And it seems like no one's interested in Microsoft anymore. But we need to check underlying the surface. Even though market is not paying attention, Copilot is being widely accepted at enterprise level. So if we check those progress and apply to the numbers, we can see whether current Microsoft price is still at a high level or now is a good chance to go into this position. So that's our third task to do, which is converting our assessment into company's valuation numbers, which is exactly what we're doing with this FSD video today. So if you're interested in this AI investing strategy, you can check out here the past video. I created 2-part series on it. And again, if you want to check out the Tesla's humanoid number-based DCF valuation model, you can subscribe to the channel and get the notice when the video is out. Thanks for watching today, and I'll see you guys in the next video. Take care.